Welcome back to another Stock Market Open live stream. Today, we have a very special day. How special is it, Kevin? Well, we get economic data out of the U.S. We get S&P manufacturing services and composite PMIs. We're looking for those S&P and composite and manufacturing PMIs to come out at about 6:45 California time. So we got a little bit over an hour to go here. Keeping in mind that we just got data out of Europe. That was a miss in Germany, a miss in France. People were worried that Germany might be trending closer to recession than we previously thought. And the Eurozone in total didn't have that great of a result in terms of PMIs. So we'll see if any of that carries over to the United States. But we'll see. Let's see here. And let's see here. We have, this morning we had Kashkari that just spoke. He didn't really tell us too much new, but let's take a peek at this in terms of Bostic and Kashkari. So Bostic released his statement, and this was in prepared text, and Kashkari gave us an interview on CNBC. Bostic supported the 50 BP and had a conviction on price stability. Did notice the labor market weakening but not flashing red. So I thought that was an interesting phrase. So labor market weakening but not flashing red. Right. But the question is, can the Fed stop that trajectory, right? 50 is not the new norm. We want to move towards neutral, but and we are a fair distance from neutral, fair distance above neutral rate. That's actually a good thing. It basically implies that we should be getting more cuts from the Fed, which I think everybody expects. The markets expect at this point as well. Let's see here. Okay, then we've got Kashkari, strong, healthy labor market. Want to keep it that way. Yeah, I mean, the Challenger report might challenge that assumption, but then again, that's probably why we got the freak out 50. So Kashkari does say we should expect 25 going forward at each of the next meetings, but obviously that's all going to be dependent on what kind of data we get. So we'll see. I mean, none of this too surprising so far in the way of Fed speak. We have Bostic and Kashkari and Goolsbee talking today. We have not yet heard Goolsbee's commentary. But so far, this Fed speak is pretty straightforward, kind of what you would have expected here. Okay, so that gives us a little bit on Fed speak. What are they talking about on Pinterest over here? Let's see here. Oh, they just went to commercial just as I wanted to look at it. Fine then. We'll look over here. So, what do we have? Okay, so we've got Chipotle up 38 bips. You got, look at this, Palantir just under 37 now, down about 1%. It does, what is interesting is you have Palantir in a position where it joins the S&P 500 today. So, kind of exciting. And I wonder where Bostic is speaking in Q&A, but apparently he's speaking somewhere in a Q&A. And I'm just sort of watching to see if there are any alerts that come through him. He's not on CNBC. I don't think he's on Doomberg, so. He does say we're not in a mad dash to neutral. So, obviously the Fed confident enough, at least in labor, not to rush it over, eh? So let's write that down. Not in a mad dash to neutral. Okay. Then, yeah, today really we were going to get the S&P manufacturing services and composites, to just get Chicago natural activity index. I don't know too much about this one. I don't know that a lot of people pay attention to this one. But anyways, expected to be negative. The prior got revised down more, but this one came in a little bit higher than expected. I don't know much about that one. But we can look in a moment and get some more on that. I want to take just a sort of peek at what's going on here in pre-market, though. Look at this. You've got Tesla up 1.5 basis points. SMR, a lot of people have been talking about this one because it was up 11% last week. Look at BTC on the 5-minute. you have this line here, the 63,840 line, which we got rejected at once, twice, broke out, and then lost again. So you've had some entertainment over here for sure on BTC. And okay, let's look this up. Bostic expects demand will continue to sustain employment. Well, I guess we'll see. Bostic expects demand will continue to sustain employment. And that gives you sort of your indicator, right? Like what happens if it doesn't, right? Then you've got the little oopsie doopsies. So, okay. Then, expect to, yeah, yep. Okay, Chicago. Let's take a look at this. Chicago Fed Aug National Activity Index, not natural. Okay, let's take a look at this. Fed Reserve Bank of Chicago. So this is, okay, here we go. So it increased 12 bips in August from negative 0.42 in July. 3-month moving average decreased to 0.17 in August. And 3-month moving average decreased to negative 0.23 in August from negative 0.11 in July. So moving average still moving down, but it does look like you had a little bit of a pop there. Production-related indicators contributed in August. Sales, orders, inventories down. Employment-related indicators contributed negative 0.01. Personal consumption, 0.04 to the negative. So, all right. This kind of gives you their chart over here on this activity. Okay, here's your... This shows you how volatile it is. And what's interesting is you could definitely see it go down without having a recession. And you saw that in 2015. You saw it over here in 2003. Saw it over here in 95. So I don't know how particularly useful this index is. We shall see. All right, let's go back over here.
Hawkish messaging and a relatively high bar for the unemployment rate to warrant another aggressive cut. Pooja joins us now for more. Pooja, I just want to get to your growth outlook, and I just want to sit on your GDP outlook. Did you raise your GDP outlook after getting that surprise move from the Fed last week?
We did. Good morning, first of all.
That actually kind of makes sense. You get a larger cut from the Fed, your GDP forecast might actually pop up a little.
For the fourth quarter of this year, and then we've got a similar pace of growth, in fact, through the end of next year. Some of that was, of course, the easing in financial conditions that we've seen over the past, couple of weeks. We track the Fed's FCIG measure, which translates financial conditions into the impulse for growth. And it does suggest that growth could look better. So yes, to your question, we have raised our GDP forecast modestly in the near horizon. Yeah.
How does that line up with your view on the Fed's next move and the moves through 2025?
Yeah, that's a good question. So look, our own baseline is for 225 basis points cuts this year. So that's, broadly in line with the median projection for 2024. For 2025, we've got 325 basis points cuts. So that's a total of 75, as opposed to the 100 basis points cut that the FOMC median has. And that's really predicated on the view that, the economy is going to look pretty decent. We don't have the...
As long as jobs hold up, that could be true. You just don't want to see that weakening in jobs. That's where you've got a little bit of the oopsies. Now, in fairness, and even Bostic's just now talking about it, because we talked about this yesterday too in a video where we talked about, there's one of the reasons maybe the unemployment rate has gone up this time. This is where people go, this time's different, is because there's been a higher supply of workers. And Bostic mentions that as well. Higher supply has contributed to rise in unemployment. It's an argument, but if you had higher supply and you were able to fill it equally, your unemployment rate wouldn't be rising. So So obviously less of an opportunity to fill, and that's what we're seeing with fewer job openings as well in markets broadly. Okay, so let's see here. Let's go hop in over here.
Level of uncertainty with private investment in China, that's become just one of the reasons on top of the debt and the demographic decline that they're going through, which is what's keeping growth in China so weak. But yeah, I know a lot of this is now in the price because the Chinese stock market is, if you look at the MSCI China, is down about 70-odd% from its highs. It's at a time.
Yeah, well, China's having oopsie doopsie. That's exactly why they're thinking about a what's it called? Maybe some stimulus measures. It sounds like there's supposed to be some form of announcement from the People's Bank of China tomorrow, and they did a small little 2-week rate cut this morning. But we'll see if they have some more stimulative announcements coming up, which will be really entertaining. Usually, you don't want to bet on China stimulating. They usually aren't very stimulative. Usually not. Usually not. Pop in over here for a second.
IRS agents. The group applauding her for increasing their budget. The union saying, quote, when it comes to treating federal employees with respect, valuing their service and investing in their work, Kamala Harris is the clear choice. She shares our values and our commitment to making sure that the federal government works for all Americans. A massive spending bill passed under the Biden-Harris administration, giving the agency $80 billion in new funding, promising 87,000 new agents to get hired. President Biden's current budget proposal for fiscal 2025, it's asking for another $104 billion for the IRS. New Google emails produced by the U.S. government in its antitrust case against the company show unease over the search giant's dominance in the advertising space by Google employees. The Justice Department spending almost 2 weeks presenting evidence to support its case that Google has a stranglehold in the online advertisement space, unfairly punishing their competitors. These internal communications are, according to the government lawyers, some of their strongest evidence against the company. And then there's this. It's the end of an era for Kmart. The iconic retailer is closing its last full-size store in the United States. The store located...
I thought they were already long closed.
...stores for good on October 20th. In the 1990s, Kmart had 2,300 stores around the United States with about 350,000 employees. It merged with Sears Holdings. And, of course, that company declared bankruptcy back in 2018, Maria. And those are some of your headlines.
Yeah, 2018 bankruptcy and just now closing the last store. That's crazy.
Week on Wednesday, Reuters is reporting that Harris's new policies will be announced in Pittsburgh on Wednesday, and they will, quote, aim to help Americans build wealth and set economic incentives for businesses to aid that goal. Some critics are now sounding the alarm after a major IRS-affiliated union, as you just heard Cheryl report, the National Treasury Employees Union, endorsed Kamala Harris. Conservative commentator Joey Manarino writes this on X, get ready to be taxed to death. And Harris's economic proposals include a ban on so-called price gouging, although she recently admitted that very few companies engage in the practice. Watch this.
I am taking on, for example, price gouging. Which is when, most companies and corporations are good, but for those bad ones, they take advantage of people, especially during a pandemic or extreme weather, and they end up jacking up prices, and there needs to be accountability and consequence for that.
Joining me now is the president and CEO of Goya Foods, AFPI board member and Hispanic Leadership Coalition chairman, author of Blessed, Donald J. Trump and the Spiritual War. Bob Unanaway is here once again. Bob, great to see you. Welcome back.
Thank you, Maria. Great to be back with you.
So the last time we spoke, we talked about Kamala Harris blaming corporations for the spike in inflation. And now, just there in that soundbite, she seems to be backing out of it a little, saying most companies are good. But if most companies are good and there's not a lot of price gouging, why is that the underlying fundamental of her economic plan?
Well, it's a clear comparison. Look, the Francis Scott Key Bridge took 4 years to build. Donald Trump built an economy in this country. He brought up the middle class, the working class.
Okay, I'm gonna fall asleep here. I need some more. I need some more schnaz here. Some more pizzazz. Let's see. Maybe this guy's got it.
You still see a lot of sticky dynamics in inflation, particularly related to wages, which are showing.
Really? Where do you see stickiness in wages? Because it seems to me like they're falling.
Of a certainty around 2% inflation, and much more likely that we have higher inflation ahead rather than lower inflation.
Normally, somebody with that kind of view would be bullish, because if you believe in this sort of strong economy that could foster some reignition of inflation, that would be probably positive for equity valuations. But you wrote the stock market is priced to perfection. And so far, this quarter is providing plenty of data points that the perfection is unlikely to be achieved in reality. Why?
Well, I think when you're trading markets, you got to trade against what the price and expectations are. And we're at PEs that are, almost as high as they were during the tech boom. We have forward earnings growth expectations in the mid-teens. That's a pretty strong scenario, already priced into the markets. Now, the Fed is helping that along, and that's probably a positive. But I think the story is much more around being long stocks relative to bonds, because that's the scenario, of the growth reacceleration that probably isn't fully priced into the market.
Let's introduce China into the conversation. They're now exporting disinflation, perhaps even deflation. How do they factor into your worldview right now?
Well, China's experiencing debt deleveraging, akin to what happened in Japan and akin to
sort of classic balance sheet recession.
A classic balance sheet recession, and the policymakers there are maybe driven by motivations that are not related to macroeconomic policy, more like political motivations. And so, for whatever reason, they're choosing not to respond to the situation. And so, China's probably in this malaise for the foreseeable future. I think the effects on the West are actually relatively limited, and the reason why that is China's deflationary impulse has been basically the same for the last couple of years. Probably China is not going to accelerate in terms of getting a deeper and deeper or a worse rate of deflation going on in the economy. And if anything, we've seen it tick up. And so the big picture is it's probably not the main story that's going on. When you're looking at U.S. inflation, Western inflation in general, what really matters, it's the labor markets. It's all about the labor markets.
Yeah.
It's all about that wage data. If you look at the Atlanta Fed wage tracker data, we're 1 to 2 points above where we were pre-COVID. And unless you believe productivity has matched that increase, that's an underlying inflationary pressure that remains in the economy.
But Bob, isn't the deflationary pressure coming from China has everything to do with the commodities market? Isn't that helping Western economies?
Yeah, it certainly is an effect on the commodities markets. And if you're trading, copper or other direct commodities that China has a meaningful share of, that's going to be a meaningful influence.
Let's look at that. So, the wage growth here has been falling. What he's referring to is that over here you've got, maybe a 1% spread between pre-COVID and post-COVID. But the reality is, when you look at where we sit in inflation data, this has not really been carrying over too well into some of the inflation data. That's why inflation's been falling faster than expected. But let's go look at this. Services wages trending back down. Let's go ahead and just look at them one at a time. College degree services trending down. Male wages trending down. Hourly support trending down. Almost back to normal there. Job stayer. Job stayer has a nice spread. Look at that. 3.4, 3.1. That's closer to 1.5% spread. Overall, usually full-time. Yeah, all of them about 1% more. Women, about 1%. Job switchers. Job switchers have also plummeted. Job switchers are almost par. That's actually interesting. Yeah, look at that. August of 2024 is actually lower than Jan 2020. So job switchers are actually starting to get punished. We can even go back over time more here. And you can compare this going all the way back to, what do we go back to here? 1997 on the Atlanta wage tracker. And we sit now below the 90s. So like below 1997, 98, 99. The last time we had declines, actually you generally only have declines by recessions. Look at this. You have this decline here in 01 to 03. You have this decline here in 07. And what's interesting is the decline doesn't really start until the recession starts. Now, obviously, we got so heavily above normal over here, but we're now lower than where we were in the late 90s. And the trend is just like straight down. So I personally have this long run view that, wages are going to end up getting so low because there's going to be so much excess labor, in part due to artificial intelligence, that you're going to be forced to see stimulus from the Federal Reserve because you're just going to be in this nasty environment where you have to cut rates way more than markets anticipate. And I certainly expect yields to drive down in the face of that, especially since, what have market rates done since the Fed's 50 BP cut? And let's go look at the 2-year. We know the 10 years up probably somewhere around like 10 basis points. I think we were down at like 3.65 at one point there. Now we're at 3.76, so you're like 11 basis points up on the 10, which is remarkable in the face of a 50 basis point cut. And then you look at the 2-year. The 2 years up, let's go to like the 5-day. 2 years up about 4 to 5 basis points. So you had almost this across the curve tightening of financial conditions, not loosening. This is really interesting to see that, especially in the face of some of that weakness. But yeah, I don't know. I mean, to me, what stops this decline? It stopped in 2009 over here, and then it stopped in 2002. I mean, these were post-recession stops, and then it sort of takes a while to pick back up again. But I don't know that there's an indicator of a stopping in this. I mean, I wouldn't be surprised if you could see wages go to almost flat, which would be all the way down here to zero, essentially. If wage growth went to negative, you'd have to create something this chart has never seen before. It'd be very interesting. So yeah, I don't know if this is as bullish as that individual suggested. Oh well. Kevin, what do you think about Michael Saylor's base case of $13 million a coin for Bitcoin by 2045? I think it's ludicrous. Let's see here. What else here? What AI is taking away labor? Okay, well, I mean, it's pretty easy. You could look at IBM talking about replacing potentially 6,000 jobs. Look at Klarna, who thinks they could reduce their workforce by over 70% thanks to the amount of customer service interventions that can be resolved by AI. I mean, I was talking to my brother-in-law about this yesterday, and we're like, pretty much all tier 1 tech support or customer service support could just be replaced by artificial intelligence now. I mean, medical diagnostics or another one. I mean, there are plenty of places where artificial intelligence is damaging, the ability for people to get jobs already. So, yeah, it's going to be interesting. It's going to take time, but, it'll take a decade or whatever, but yeah. What kind of stimulus, though, Kevin, and will it cause inflation? You mean in China? Oh, China is facing so much deflation. I don't think so. Let's see here. Gotta say thank you for the idea of going negative on points right now. Looks like a good idea if buying a new property. Oh, 100%. Yeah, no, well, it's going to be another thing that we, not only we teach on the channel, but we also talk a lot about, what's it called, in, or expect to talk a lot about in Stock Hack, which we're launching our first calls for that at about 5 o'clock today. We'll have a little bit of an updated website and a new video out, and then we'll actually have like a book your call form. If you have questions or if you want to sign up with us, you'll have an opportunity to do that as well. That'll all be around 5 o'clock today for starting October 1st. So it's pretty exciting. Getting pretty close here. Let's see here. What else? Hyperinflation incoming once they execute the next big bailout. Yeah, I don't know about that. But I do know that people think about that. So What else here? Okay, what is this? Kevin, could you talk about SRWD? I don't even know what that is. You know, it's hard for me to talk about things I don't know what they are. SRWD. Nothing even comes up for that. SRWD. Seal Rock Water District. No. Yeah, I don't know what that is. It doesn't even come up in Weeble, so or maybe it was a different ticker you meant to say. Could it be Solar Wind? Solar Wind? No, that's SWI. No, I don't know. Anyway, so okay, all right. Let's see what else we got. What do we got over here?
Shares of all three companies on the move this morning. Again, Intel up just about 1% right now. Apollo Global down just about 1/3%. Qualcomm close to flat, down fractionally lower. All right, we are also looking at shares of AstraZeneca. Those shares also lower this morning, down just over 1.5%. This follows a disappointing result in a phase 3.
CrowdStrike? I like CrowdStrike overall. I think their valuations exploded over the last year, though. I always get nervous about some of these relationships or these valuations. Honestly, it's some of the numbers are just crazy right now. But yeah, you're at 300 on Crowd. It did come down. Look at that right off this. We actually drew a Fibby on it, and let's take a peek at what the valuation is right now. CrowdStrike financial analysis. So $3.63 of earnings. That puts this company at $3.63. It puts it at about 82.5. 82.5 times for a company that's going to grow maybe an average of 20%. 82.5 divided by 20. It puts you about a 4 peg. It's a little rich. But then again, a lot of things are really rich right now because people really think that, we're going to be able to stick a soft landing. I really hope so for the state, for like the sake of, the startup sector, which I think is much more valuable than really anything else at this point. But in terms of future growth potential, but the odds of sticking a soft landing, I think, are so low. I think there may be a 20% chance of a soft landing. And I know Yardini came out this morning and he's like, "Oh, we have an 80% chance of a soft landing." I'm like, on what historical precedent? On what historical precedent has the yield curve been this inverted? The Somme rule been triggered? The situation compared to the last time we had a soft landing being essentially the complete opposite of what we face today. And you can watch my video on that yesterday. It like the signals are just bad. I made a list of continued recessionary signals, and pretty nasty. Let me look at them again here really quickly. Here we go. So Somme rule, the uninversion, the plateau in the personal savings rate, the peak of government, education and healthcare employment following the peak in privates, delinquency rates on consumer loans, delinquency rates on credit card loans, architectural billings, United States ISM manufacturing being sub 50, ISM services being above 50 but still low compared to historic boom times, construction spending month over month, a waning pricing power of companies, construction job openings falling rapidly, temporary hiring at its longest stretch of negative readings ever, Jerome Powell's warning about we seek no further cooling, the Fed Beige Book seeing 9 out of 12 districts flat or declining, the Challenger report showing the slowest hiring since August of 2009, the number of unemployed 27 weeks or over, never increasing consistently absent a recession, and guess what? It's increasing. It's not good. So, I know people can cherry pick, but this is, I like to put together a giant list. I mean, here's the job openings one. This collapse in job openings this year so far, which this updates on, a monthly basis. And so you look at August, still not out yet, looking for that job openings for August. Maybe we'll get a little rebound there, but still, yikes. And then look at 27 weeks, unemployed, St. Louis Fred, pop in over here. Look at this one. A lot of people haven't even looked at this signal before. Look at when it increases. They're recessionary times. So not ideal. We've barely had a little bit of an increase here. In fairness, it does seem to come a little bit later, typically, but it depends on the recession. See, here in 2008, you had the increase similar to now in about May of 08, which is somewhat early in the recessionary cycle because we didn't really think we were in a recession until September of 08. And it took a little longer to get the pop over here. It was November of 01. It almost like you knew you were in a recession at that point. February of 91, you knew. 82, you knew. So it's not the best leading indicator, but it certainly suggests that, if somebody was going to draw like the gray bar of recession, we might be in the recession right now. And who knows, maybe we're at the early third of that recession or what, who knows. The concern is what happens when that unemployment rate really pops off. And that really happens almost all at once because, companies freak out and everybody just sort of dumps together at the same time. It's a really rough thing to prepare for because it just happens so fast. So, it's kind of interesting. Yeah. So, Bitcoin's really losing that 63,840 line. It's right now sitting at about 63.4. Tesla, though, is up about 2%, while Apple and Microsoft are down about 0.5%. And 10-year Treasury is still up like 3 basis points, which is pretty good. That's a pretty wild move there. Yes, Sam did indicate that her rule may not apply this time. Well, this is what everybody's arguing, is that this time is different, right? They're making the argument that, post-pandemic normalization, blah, 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 blah. So there's no indication of a wage price spiral, though. In fact, Jerome Powell mentioned himself that wage price spiral is not something they're concerned about. Infrastructure spending, long commodities. After the Fed rate cut, commodities jumped there. No. Always do the opposite of what the data says. The market is done making sense. There you go. Don't you think there's a high probability that the market doesn't start pricing in a bad recession until January? I have no idea. I have absolutely no idea. I think it is logical that you could have layoffs in January. But honestly, it's also logical that if you get bad guidance... that was weird. What just happened there? Oh, okay, that was a glitch. If you get bad guidance in the next set of earnings, for the holiday season, who knows? You could have some pruning going into the holiday season. It seems like that would be odd. It seems like people would want to keep their employees for the end of the year, but I guess it depends on what kind of business it is. See, some businesses actually really slow down going into the winter, like home building or construction, right? That stuff tanks because, building really slows down in cold environments. But, retail spending usually picks up because you have, holiday spending. So who knows? We're 100% in a recession. Meta is the only interview I got in 6 months. Been in the game 16 years. Holy crap. I mean, Meta's not a bad place to get an interview. Did you get the job? I hope you did, but that's crazy. I do feel bad for people looking for jobs right now. How is the Fed going to fix wage growth if it goes negative? Well, yeah. So actually, Steve, this could be really good for your rocks. I think that I don't know exactly when, but I think over the next decade, there's a very high likelihood that wage growth is going to collapse, and we're going to see outright wage deflation, which will be really terrible for workers. I'm not encouraging it. I'm just saying I think it's coming, and so I think you should be prepared. If you're if you're working somewhere, you're thinking about changing careers or whatever. Like, my thinking is just work extra hard now if you can. But it sucks because if you get wage deflation, companies will make more money in terms of earnings, but employees will make less. And then the problem is, do they then spend less, which then filters back into less revenue for the companies? So it's a little bit of a poopy situation. And so how does the Fed resolve that? Well, I honestly think we're going to trend towards negative interest rates. I think interest rates will be lower in 2032 than they've ever been before. And we'll be trending towards negative interest rates because we'll be trying to stimulate a jobs market that just won't stimulate because of so much productivity thanks to, substantial unemployment. Listen to what Kevin is reading. It's bad, really bad. I mean, that's a long freaking list. It's a list of these recession indicators. This is a long list of poop. I mean, hey, maybe it'll all turn around and we had all the poop and it's cleared out and that's it. In which case, fantastic. Maybe this time is different. But it just seems like the way I look at it, it's like, okay, cool, market goes up, yay, you have extra money. But the worst case scenario is market goes down and then you have like a business failure or something like that, right? So everybody's situation is going to be unique on that. It's one of the reasons why we started Stock Hack too, is just to really help people with their personal situations, which is open to Canadians, by the way, as well. Which is going to be kind of cool. So you can learn more about that at stockhack.com. At 5 o'clock today, there'll be a new video with a lot more detail on that homepage. And there'll also be a place for you to book a call or just sign up directly, depending on, if you have more questions or not. It'll be really cool. Do you think the next cut will be 50 or 25? Well, all of that's going to come down to what the next data sets are, So what's the next jobs report? The next Fed meeting isn't until after the election. So what's going to happen over the next 6 weeks between now and the what's it called? And the election. Yeah, kind of crazy, eh? So yeah, right now people are predicting 225s. Yeah, people have been saying bonds are going to go up due to the issuance of new debt forever. That's fine. It's not a concern of mine, mostly because I'm just so in this market is about to slow down a lot more. I don't know what that in the short term means for stocks. That's fine. I'm not short stocks, but I'm convinced the Fed is going to have to cut substantially more than markets are pricing in, and so I think the entire yield curve will move lower on that. Marketing, advertising, slow in December. That's not great. Somebody says VIX calls. Let's see. VIX. What's it at now? 16. Wow. It's back into its little channel. Look at that. LinkedIn in full of fake IT job ads. Yeah, there's a lot of talk about that a lot of these companies aren't actually hiring. What about bonds, treasury bonds with interest? Yeah, I like them. I'm a big fan of the 20, 30-year bonds. Big fan. Do I have voice isolation on? I don't know. What does it sound like? Does it not sound good? I hope it sounds okay. I just had to get a mortgage at 6%. Nice. Data dependent. So these comments are funny. Somebody here says, I predict our current stagflation will continue. Ooh. Big businesses, data mining. Are recruiters actually hiring? They're selling data. I mean, you look at the recruiters' earnings calls. They're terrible. Really terrible. I didn't get hired because they thought I did too well on the interview and claim I used GPT. Oh, no. Oh, sorry. I didn't realize the TV was on in the background. I don't know why that keeps happening to me. I accidentally. But look, it's Sarah. She's filling in for Jim today.
Now is obviously what they're going to do next. I would just point to the 10-year Treasury yield because, after they went, so if you look
50.
at yields, but right before the Fed decision, what was the 10-year? 3.64, around there.
Yep.
We're higher. actually,
lot.
as the outlook is maybe a little more hawkish than what people expected to get from the Fed, even if the action was more dovish at 50, by saying we're not guaranteeing more 50, by getting some stronger economic data. Remember, jobless claims are still at the weakest since May, so that's not pointing to a ton of stress in the labor market. And
Yeah, well, that lags like crazy.
And retail sales were a little better. GDP tracking for third quarter is what, 3%? Not bad.
Atlanta's 2.9.
Yeah, I mean, that's a healthier economy. So the market's in a bit of an interesting position right now in terms of maybe priced for perfection as far as cooling inflation and weaker data that would allow bigger Fed cuts. And if we get stronger data, then maybe they don't need to cut quite as much as the market's hoping for, which is good for stocks and for earnings power. But again, 10-year yield, a little bit higher. Pay attention. I think that matters.
That's one reason we got.
She's totally right, because you're tightening is what you're doing with the higher yield.
Well, that's something that has resumed, which is the steepening yield curve, and people saying it's long overdue, and we'll continue to watch that as well. But overall, it's been, look, good for the market. I thought Mike Wilson from Morgan Stanley, with his comment about the Fed and how it relates to stocks, was notable. He wrote over the weekend, the Fed delivered on what we thought was the best short-term case for stocks. Tactically, we continue to be neutral on defensives or cyclicals as markets await more clarity on the labor data. We continue to recommend large cap quality bias. So again, we get to this debate about big versus small, where big has won out, although the market has brought in two since the rate cuts. And then maybe some M&A.
Yeah, you want to do that now? You ready to talk about that?
I feel like
Oh, yeah, they're going to talk Intel here. Apollo putting in a $5 billion bid. It's a $93 billion company, Intel, but obviously that would just be for a slice of it. You know, Qualcomm talking about it. But we are now 16.67 basis points uninverted on the yield curve. I think what would be really interesting is looking at prior uninversions. 10-2 yield curve, and look at usually it seems to be the biggest stress comes around when we're like at 50 basis points uninverted, but I want to fact check that. So yeah, that's not ideal. So look at when the recession begins in the uninversion phase. When you invert, you don't have recession. This is, your 89 period here. Here's your 81 period. No recession on the inversion. 79, no recession. Look at when the recession hits. Spike in uninversion. Spike in uninversion. Here, look at this, 91. As soon as you got to about 45 to 79, boom, spike in the uninversion, recession. And it actually goes through the recession, and it keeps growing through the recession. Look at this over here. 2001, you uninvert. You uninverted to 57, and you were still not in a recession. It wasn't until you uninverted to 1 that the recession hit. That's crazy. Which could be the dropping of the 2-year, right? But usually in recession, the entire yield curve plummets. The 2 just plummets more rapidly, of course. But anyway, look at it over here in 2008. In 2008, you didn't hit recession until you were 93 basis points uninverted. Right? Look at COVID. Freaking COVID. In COVID, you were in recession when you were uninverted. So, people were like, oh, look, we're 18 basis points uninverted now. Congratulations, you're, 50-ish basis points away from the start of recession. Like, the recession isn't here. The recession is in front of you when it comes to the inversion. I mean, at least that's what history says, right? And who knows, maybe history's wrong. Maybe this time is different and there won't be a recession. Maybe this chart that has told us one thing every single time is just like JB here says, just lines on a graph. Don't pay much attention to them. Okay. All right. It happens much faster than people think. And that's what always makes me so nervous, because unfortunately, it's hard to be short going into a recession because the recession happens so rapidly. So, that's why, I prefer a different play that I think would do very well in a recession, but doesn't do horribly, in a rate cut cycle. So we'll see. But yeah, this is crap. So you did think that last year? No, last year I said that we were in a Nike swoosh recovery from the 2022 lows. And that's because that's what the data was indicating. The labor market was way stronger last year than what it is today. Way stronger. So, most of the pain data has started to happen here. Somebody says, but not every single time. Really? Where do you see not every single time that you go from uninverted to so positive? I'm pretty sure what I said is correct. Every single time we went from uninverted to positive, we were in recession. Or sorry, inverted to uninverted. So inverted, didn't go positive, went positive, boom, recession. Inverted, didn't go positive, went positive, recession. Here's your recession coming out of it. Inverted, went positive, recession. I mean, you could make this argument that, oh, well, it briefly popped up and then back down over here, but, come on, that's part of the same signal over here. You could make that argument over here as well. Is it right? What is that? 98. That might give you more time, but then you wonder also, like, how much inversion did you get? You got 5 basis points of inversion here. You had 43 basis points of inversion here. The recession still happened later, but look at the depth of the inversion. I mean, we haven't seen a depth this bad since the 80s. It's kind of remarkable. So, okay, what's this? Why is there a downgrade on Palantir? What the hell?
Perpetuity. And that's where, it's hard to make a case that, they will continue to grow at the pace that they have. But, time will tell if they can execute on this valuation. The pressure is more tied to the valuation than anything else.
Did you see the video of Alex Karp running in the woods with the poles talking about the index inclusion?
I mean, look, it's a big catalyst, in terms of drawing interest. Palantir is a company that has a lot of retail interest. So, it's definitely played out well. The problem or the challenge is in meeting expectations, because when you're trading at 40 times sales, the estimates and the expectations go higher.
And Alex Karp could be also personally a problem, right? When you say, did you see the video of Alex Karp? I'm like, oh no, what did he say this time?
No, just on the index inclusion, he was in.
Well, in fairness, the valuation right now of Palantir is highly dumb. And I'm a big fan of Palantir. I've said probably for a year and a half or more that this company is like, this is like a real AI play. But now I look at this as a $37 stock divided by 36 cents of earnings. It's selling for 102 times, and it's expected to grow maybe 22% over the next 4 years. That's 4.6. 4.6 on the peg. That's an insane valuation. In any kind of correction in these insane valuations that we're seeing right now, whether it's Palantir or frankly even Tesla, could lead to some serious pain rapidly in markets right before the election. And that triggers layoffs. Boom, there's your recession. And then all of a sudden, oh, the Somme rule was right. Oh, the inverted yield curve was right. Oh, the Challenger report warnings were right. Oh, the slowing labor, force was a warning. But then people are going to be like, but how come unemployment claims weren't a warning? Because no shit. They only spike after you're deep in a freaking recession. Honestly, I want to send Sarah Eisen like a message, like a letter. I want to send her a letter because I like her, and I just feel like she's making a big mistake constantly talking about unemployment claims. And unemployment claims are fine, so everything must be fine. Come on. First of all, they're volatile. Second of all, they really consistently go up after the recession has begun. And you really got to spike out these occasional one-timers here. So what I like to do is just go over here, go to the monthly. There, that's going to help smooth this out a little bit. You can even go more if you want. You can make this whatever you want. Go to quarterly. And this actually really helps you see it. If you go to quarterly, look at that. I mean, your unemployment claims, they spike in the middle of a recession, right around recession here, recession here. Here's an interesting jump. You did get a jump in unemployment claims, no recession over here in 95. But, we compared 95's FOMC transcripts yesterday in the video on the channel, and substantially different than what you would actually expect in a recession. But to consider this as a leading indicator of recession is kooky. I think we're probably, in this sort of like trough over here, like a Q3 2007 trough. And this would align with where we are in the uninversion of the yield curve as well, or the uninversion. Yeah, anyway. So you're just basically knocking on the door of recession, quarter or two away. We'll see. But anyway, maybe I gotta actually do that and send her a letter. All right. What else? Government proposal to avoid a shutdown. Haven't been watching it. I don't even know who that is. Let's see here. I really watch very, very few other finance videos. It's pretty rare. Occasionally, I do a quick check on Schiff, Gammon, but those are pretty rare, mostly because I just don't watch other YouTube. I thought Graham's Santa Monica video was really good. I like that. But yeah, other than that, I mean, I feel like I've watched like 3 finance videos in the last like 3 months.
General Assembly that's happening all week this week. Among the attendees, we're going to show a bunch of them on your screen here. NVIDIA CEO Jensen Huang, Alphabet CEO Sundar Pichai, Accenture
Some
CEO...
event? Oh, that's cool. Tech CEOs meet with Indian. What? That's a weird headline. Jeez. I'm sure they mean PM Modi, based on the context on the screen there. But tech CEOs meet... Is it my thing? Oh, yeah, that is what it is. I was blocking it. There we go. It's my fault. Okay, not theirs. Okay, so what was crazy was have you guys seen is this true? I haven't fact checked it. But the what was it, the Land O'Lakes thing? I don't know if it's true, but like they turned it into a meme. I feel like I've seen this before, but it's like circulating as like viral again now. See, this is like a couple years old. Land O'Lakes, and they showed the before right here with the Indian in the middle, and then they show the after up here, and they say that Land O'Lakes removed the Indian but kept the land. Oops. Okay. Anyway. So, oh man. What else? What else? Yeah. Palantir keeps taking profits before the reset. Resistance at 18 basis point. I don't know about that. Pull up gold price. Gold's been like up. Gold's been kicking butt. Well, I think gold might be more accurately trying to sniff out a recession risk here than the bond market right now. The bond market, it's like, I think there is just a lot of profit taking or something, but it just seems broken. Like gold is up today, which is usually a recessionary hedge, $2,652. Look at this. It's straight freaking up. I mean, this is incredible performance by gold. Really, really incredible. And I honestly, I think it's a recession warning. And bonds have been a, recessionary warning as well, probably since your peak here in about April. But this recent spike here after the Fed meeting, this is just stupid, which is okay because it'll go away, but it's irrational to see this in the face of some of the weakness that we do see out there. But we'll see.
needs to be built out there. Also point out that the hyperscalers that we talk about all the time, Amazon, Google, Microsoft, they've announced numerous infrastructure for AI.
Yeah, somebody's comparing Bitcoin to gold. The problem with that is Bitcoin's a risk asset, so it's going to get absolutely hosed in a recession, whereas gold will probably go up in a recession. Yeah. Well, kind of crazy, huh? Now they're killing our butter. Oh, no. No. Elizabeth Warren was the Land O'Lakes model. Stop. Oh. Oh.
Create your own model or buy someone else's model. Maybe this is going to become commoditized.
Somebody says, Kevin, you're so wrong about BTC. Well, talk to me in a recession and show me Bitcoin going up in a recession, man. I will gladly admit I'm wrong, but I think it just tanks in a recession, unfortunately. But then again, there could be no recession.
Indication of what demand looks like for that Copilot product. That's another thing they could have an advantage on, but so far that hasn't really broken through, Carl.
Yeah, between that Copilot event the other day, Dreamforce definitely getting spicy here regarding competition among the hyperscalers. Steve, thanks. Steve Kovac, whose plate is very full.
Oh, yeah. All finance guys don't understand it. Yeah, that's what it is. That's it. We just don't understand Bitcoin. Yes. Yes. You got it, sir. All right. So, all right, what do we got going on here in the pre-market? Come on, baby. What is this? We got 20 bips, 20 bipadudes on the Qs. Well, at least they're positive in the face of Apple falling at 50 basis points, Microsoft around 50, Tesla's been rising, 186, pretty good. Bitcoin 63.3, trying to hang on there. Small caps trying to come up. 47 bipadudes on the small cap dudes. Getting a little bit of a movement there on Redfin, but not much. Nvidia's pretty much flat. Robinhood, 75 bips. What else? Etsy. 70 basis points on Etsy. Boy, it's only $54. Got hit hard, huh? I wonder what cruise ship stocks are doing. Oh, let's take a look. CCL, $19 is pretty good. That's pretty good. Look at that. It's about to go for its third all-time high here. Well, not all-time high, but it's rejection. Oh, no, this is going to be like its fourth rejection. Look at that. Rejected here at 1974. Rejected here at exactly 1974. Rejected here at basically 1974. It's going for its fourth test of that 1974 level. That's crazy. I mean, no recession. You should get a nice breakout over there. Wow. That's pretty cool. Mm-hmm. Elon's not going to take a government job. What discretionary spending will be cut first in a recession? What business is best proxy? Ooh. Wow. Well, honestly, I think the first thing that gets cut in a recession is, I mean, I understand it's like what came first, the chicken or the egg, but frankly, jobs. So, you know, maybe it's recruitment firms, but they're already in the toilet. So, you know, then you almost wonder, like, any more they fall, at what point do you buy the dip on? So, boy, what businesses? I mean, you'd expect, it depends who's getting laid off, you know, if finance bros or white collar bros or whatever are getting laid off, you know, Tesla could get hit a lot more. If, like almost the opposite of Enphase, which if housing stays strong, rates are low, and the people with the houses still have jobs, they might finance solar panels. So it's just weird. It totally depends who is getting hit. Who's getting hit? He's getting hit. Yeah. Somebody here says you're overanalyzing. There is no recession. Okay. Consumer discretionary prior to recession. Yeah, I agree. I'm trying to think about that. Like, is it gonna be toys? Is it gonna be computers? Hooters, tutors. Honestly, restaurants. You know, remember the restaurant performance index? I mean, this is the worst. Oh, I gotta add that to my recessionary list indicator. And this is the worst performance of the restaurant industry ever outside of recession. Look at this. Look on screen. This is crazy. You don't see the restaurant industry this freaking negative in contraction outside of recession. Anytime it's under 98, you're in a recession. It's under 98. No, Kevin, there's no recession. It's just a normalization. Oh, boy. So it's no recession you want, eh?
Took over as CEO last month. Remember, the space business has suffered billions of dollars in setbacks, notably NASA's recent decision to send Boeing's Starliner capsule home without the astronauts it launched into space in June. Meanwhile, you take a quick check on futures. Of course, we are minutes away from the opening bell. Green on this screen. We'll see if it holds. This is Bloomberg.
Boring. Wow, nobody wants to do anything. They're all commercial again. Fine. Restaurant performance index under 98. Only occurs in recession. Yeah, I don't know. It's honestly a pretty crappy list. If you want a screenshot of that list, I'll put it up on screen in a sec if you want. Here. These are your recession indicators. Restaurant. Old definition. Yeah. Okay. Hold on. My list of recession indicators. There you go. Take your screenshot. All right. Tourism. Yeah, that's true. Strip club index. Oh, there you go. Is that discretionary or is that a staple? Somebody says Disney bought me Kevin. I'd love that. I love Disney. Any thoughts on fuel prices and their impact on the election? Yeah, I mean, you're not creating substantial pain with like really high fuel prices right now, right? Strip clubs are commodities. Yikes.
Deal. It's the first time I've heard her talk about it.
Yeah.
While the FTC we know is going after the deal, it's in the judge's hands right now because we've heard the final arguments for that preliminary injunction. She says the merger will lead to higher prices at the grocery store, and it's that political environment that this deal is trying to happen in. Rodney McMullen, the CEO of Kroger, says under oath that prices will come down for consumers at the grocery store if they are allowed to merge. Why? Because there's a price gap. Albertsons charges more. They have higher margins. There's work to do to lower those, and they can do that if they combine. That is at the heart of whether this deal gets approved. Kroger says people shop everywhere for groceries. At Costco, on Amazon, at Whole Foods. It's very different. So Lena Kong clearly disagrees.
Man, that doesn't sound like a bell cheering. It sounds like a riot.
To the big board, it is the president of Argentina.
Did you hear all those people going into it? It sounded like a riot. Oh my gosh. Well, it is broadly green. Let's see if we can hold up and keep it up today. Q's starting at 21 bipa dudes here. trying to figure out a direction. Looks like Apple and Microsoft are trying to go green a little bit, which is good because both of them were down about 50 basis points, and they're both trying to recover right here at the open. Tesla is trying to figure out its direction, doesn't really know where to go. I'm really surprised by Enphase going down, but then again, maybe I'm not surprised because, you know, you have, what's it called, higher yields. Dude, you know, you have the Fed cut by 50 and yields go up. You know, what a surprise. Some of your interest rate sensitives are getting a little whacked here. So a little rough there on Enphase, back down to that 113 line. Tesla's trying to run up, though. About 220 there right now on Tesla. Looks like you've got a little bit of a decline there on the 10-year Treasury. Bitcoin kind of still rotating down on the 5-minute chart. Wow, IWM gave everything up. The Russell 2000 small caps literally gave all of their gain today up. That's quite surprising, actually. Enphase now down almost 2%. Oh, Tesla popping off, though. Look at that Tesla pop. 260 right now. Looking at the flip side, Salesforce, 41 bips. Ubiquity's up 1%. You've got DocuSign up 72. AMD kind of rotating down a little bit. Probably means Nvidia's rotating down a bit too. 210 on JP Morgan. Zim shipping up a little bit. 21 bucks. Got what else do you have here? Nvidia. No, Nvidia's positive. Supermicro's trying to go positive too. Trying. Let's see what else. Ethereum. I have these set to the 5-minute. Let me change it to the 1. That doesn't really help us much. So, yeah, Tesla keeps trying to move. Only 16 basis points on the Qs right now. Red candle on the Qs. Apple and Microsoft going from 50 to 25, now at 70 basis points to the downside. Little bit of a warning that you might be getting a red trend here at the start of the week. You do have data coming out in 13 minutes, so who knows? Maybe markets are just nervous about data coming out in 13 minutes. Your S&P manufacturing and services PMIs. You know, services have been beating lately. Even manufacturing started to show some pickup lately. But now you're down 1% on the Qs and Apple, and they're really dragging down, or sorry, on Apple and Microsoft. They're dragging down the Qs. It's about to lose the lead. At the same time, Tesla kind of keeps going. Sitting at about 2.3. I don't know if it'll hold, but we'll find out shortly here. So it's possible there's a lot of this anxiety over, you know, what's going to happen with this data coming up. Let me pull up the expectations for the data really quickly. And then just a quick reminder, at 5 o'clock today, you're going to be able to, at stockhack.com, either officially sign up for it, but you could review the paperwork and everything, or you could book a call if you still have questions, and there'll be a new video out with some more details, which will be really cool. So that's at 5 o'clock today, California time. So if you're interested in that, check that out at stockhack.com, which is exciting because we're like a week away from actually being able to start working for folks, and so that's going to be fun. So, but yeah, what happens in 11 minutes now is we get the manufacturing PMIs that are, we're looking for 48.6. Services PMIs, we're looking for 55.2, which would be a slight slowdown from the last one. Manufacturing would be a slight pickup from the last one. And the composite would be 54.3, which would be a slight slowdown from the last. So we'll see what happens. Again, market's kind of just bobbing around right now, probably waiting for that data. Tesla's almost at 3%. Look at this rally here on Tesla. I think it's going to the 247 to 250 range over here. It seems to be where it's trying to go. Let's get off there we go. We were on the average candlesticks there. This will make it a little bit more clear. And what do we have here? Still 71 on Apple, still almost 1% there on Microsoft. All right, very well. So we're, 10 minutes away from data, watching Tesla rally, and let's hit the bizzles.
more value type sectors where earnings growth matter more. Well, then that also should wrap in non-U.S. to a fair degree. You might even want to do ex-U.S., ex-China.
The indicators that say we're not going into recession. Well, current GDP says we're not, right? It's a solid one right now.
Treasury yields are firmer again. I highlighted that they've been firmer since the Fed did that surprise cut. And if it's on a better economic outlook, great for stocks, right? That should be helpful. But if it is also on, well, they're not going to have as much to do as far as cutting, is that really great for stocks that have craved rate cuts for so long?
It's at least an offset to the mega bullish view. I do think if you look at history, interestingly, after the Fed cuts for the first time, Treasury yields do tend to drift higher. I mean, this Treasury market
buy the rumor, sell the fact.
Really anticipated this move, and in fact, some would argue pushed this move, in terms of what the 2-year note yield did. So I do think you can give it room for yields to lift a little bit here and not really have it be much of an issue. Remember we were talking about, can the U.S. economy handle a 4.3%, 10-year Treasury yield? That was not that long ago. So right now, what you do want to see is these yields, if they even go up, stay kind of tame. You don't want mortgage rates shooting to the moon.
Fed doesn't want to see that.
Fed doesn't necessarily want to see that. So, obviously a lot of moving parts to fit together, but at this point, it's the don't fight the Fed, don't fight the tape rules suggest, give the market the benefit of the doubt.
We're still under 4% on the 10-year, which I think people see as encouraging.
Yeah.
I was just looking for individual stocks today, if there was follow-through on Nike, because of the huge announcement that came Thursday after the market closed, and I wasn't here on Friday. So I'm curious to discuss it with you guys. But a little give back today, 1.25%. A lot of excitement, and over the weekend, speaking to sources inside Nike, overnight the morale changes as the company announces it's bringing back 32-year veteran Elliott Hill to become the next CEO. That's going to happen on October 14th. Before that, though, Nike's going to report earnings on October 1st, and today there are questions about what that's going to look like. Are they going to reset earnings and guidance lower because they have this new CEO coming? And because the trends have not been favorable for Nike on the innovation and growth side, especially in China, where the macro is weak, we know, but also in North America, where there are questions about how much market share they're losing. Look, they're still huge. They're still the giant player in the room, and there's a lot of optimism that what's old is new again, bringing back Elliott Hill, who understands product, understands what sells in the marketplace, understands the unique culture of.
I just honestly wonder how much Nike paid to have CNBC shill them so much. Like, when they made this CEO transition announcement, they spent I was watching it live. They spent it was actually Sarah doing it. They spent 20 minutes talking about how great this was for the company and how this guy is on it or whatever. And I don't know. It feels like either they all own Nike stock or they got paid really well by Nike to yap the crap out of Nike. There's some weird things going on there. But anyway, Tesla is just moments away from hitting 247. I have a light line here, but a much bigger line at 250. So I'm watching these pretty closely here. Oh, wow. Apple actually recovered just within the last minute here. And we're still about 6 minutes away from those PMIs. So we'll see. And Palantir is actually recovering as well. Look at Palantir. Nice recovery here just within the last 5 minutes. It was down about as much as 1.5%. And so you had a pretty good recovery here. Bitcoin's still kind of stuck at 63.2. FedEx is up 1%. Wonder how they've done since earnings. Oh, well, I mean, they gapped down and now they have a little bit of a bounce. Okay, got it. IWM slightly trying to go positive again here. What a ride. I mean, it was down at 0 there for a brief moment, and now it's popped back up. Amazon, 19 BIPA dudes. Intel up a little bit. Nvidia, look at that, bleeding out. I mean, it was up, last we checked, 80 basis points. Now it's flat. Just lost the lead and gained the lead again, but bobbing around. Enphase, look at that perfect bounce. 113.40, that's crazy. Hope you have a line there. I do. Yeah, all right. Well, let's go back here for a moment. We got those numbers coming out in 4.5 minutes.
Oil is a little tangential to it at this point. So, you did see oil, bounce just on a technical way, I think, more than anything, when you also had kind of an everything rally after the Fed, which included some commodities.
Sure.
So, I don't think that's necessarily.
Commodities definitely pop.
What you hear is this is the moment where if you're going to see a little bit of election year give back seasonally, it happens now. And I don't know anybody who sort of won't go out there and say, yeah, history says, it could be choppy from now through the election. On the other hand, almost every one of those people say, then you buy it for a fourth quarter rally. So nobody's too nervous, even if the stated bullishness is not really that conspicuous. I think the highest target on the street for the S&P is Brian Belsky at BMO is like up 7%, right? He's the only one saying we got more than 5% upside right now.
I think it was the JPM desk today. To your point, we are inclined to buy every dip as they look for some election chop in the next few weeks. By the way, we mentioned crude, nat gas, highest since July. Watching utilities as Constellation Energy, David, adding more to Friday's gains.
This story that we have been following, I think, fairly closely in terms of just the endless need for power, given really the rise of the data center in terms of powering generative AI and any number of other areas. Of course, it was last week that they said they're going to bring back on the power from one of 3 Mile Island's reactors in order to essentially provide power to Microsoft to run what else? Large data centers. This has been a sort of an unexpected story, I think. If you had told people when ChatGPT was introduced back in the fall of 22 that would be the case, I'm not sure that they would have immediately, Mike, rushed to buy utility stocks.
No, it was definitely like the third bank shot off the AI trade. If you look at a chart of industrial production, electric utilities, basically just electricity production in the country, it's like flat for, I don't know, 15 years or something, and just barely has ticked there. So this is all kind of on the come, obviously, in terms of electricity demand.
Although the percentage gains that are at least seen by many of the experts are very significant. We're talking 20, 30% over, let's call it, the next 10 years or so.
Right. And so off of no growth for that many years. So it's obviously very, very new. You do wonder if it also just catalyzes, reduction in cost in terms of every other alternative kind of energy. In other words, innovation, investment. It just seems to me it can't just be.
We shall see. All right, we're now 2 minutes away. 2 minutes away from the data. It's not even like that crazy a data. It's just the S&P stuff. S&P manufacturing and services. It's some data. We do get the rest of this week, we'll get some home price data tomorrow, consumer confidence data tomorrow, Richmond manufacturing tomorrow. We'll get revisions to GDP on Wednesday. I think that's Wednesday? 24, 25, no, 26. No, Thursday will be revisions to GDP. GDP annualized will be on Thursday. GDP price index will be Thursday. Durable goods Thursday. Capital orders Thursday. Pending home sales Thursday. Continuing claims Thursday. Wow, that's a lot of data Thursday. And then Friday we'll actually get PCE and University of Michigan. Advanced good trade sales. Wholesale inventories. It's a lot. Actually a lot of miscellaneous data this week. It's not like a CPI or a jobs week, but it's just a lot of actual data. So anyway, next data set out in about 30 seconds. And then again, mark your calendar for 5 p.m. today on the opening of StockHack signups. And then the sooner you sort of book calls, the earlier availability you'll get, since, the Calendly will fill up. Okay, so let's see. 10 seconds away from data. Let's go to the Qs so we can see the Qs react. And the data is going to be better or worse. It is worse on manufacturing, a smidge better on services, and a smidge better on composite. So when I say smidge, it's like 0.1 better on services, 0.1 better on composite. but manufacturing came in 1.6 under. So manufacturing gets hit again, and then services kind of like right there at the expectations. So you don't really see kind of any kind of market impact here. I think this might be one of those data sets where people are like, all right, get the data over with, and then you kind of move on from it. But I do think it's worth paying attention to. So this is for the September preliminary. So this finally gets away from some of the August numbers. So preliminary read for September. And these do feed into estimates for GDP and otherwise. But manufacturing comes in at 47 versus 48.6 expected and 47.9 prior. So that's a miss. And then services come in at 55.4. Oh, here. Let's see what commentary they add to it.
But some of them are above 50. Let's look at S&P Global. On the manufacturing PMI, 47.0. We're expecting a number well over 48. In the rearview mirror, 47.9. This is the weakest since June of last year. Now, if we look at the services, it is above 50, 55.4, but it's still the weakest since, well, just July of this year. And if we look at the composite, 54.4, same scenario. It's over 50, but it's the softest since July of this year as well. So 2 out of 3 are above 50. Services, of course, pushing up the composite. And similar to Europe, manufacturing not doing well. Think Germany here. And some highlights to keep and pay attention to. We do have 2s, 5s, and 7s, 183 billion in supply. That'll all be occurring Tuesday, Wednesday, and Thursday of this week. And we want to pay particularly close attention to all the yield curve spreads. 2s, 10s right now, hovering around 17. Well, that's the steepest on a closing basis it's been in 27 months. Squawk on the Street will return after a short break.
Yeah, interesting. You're also seeing, again, and this is what makes me so nervous about, like, the Fed's going to have to freak out here at some point. But after that data came out, even though you had a miss on manufacturing that was substantially larger than that fractional beat on services, you're actually seeing, if you pop in over here, you're seeing the yields on the 10-year go up. You just went from, like, 3.2 basis points up to 4.6. So weird, but a big move here on the 10-year again. More short-term kind of pain in the bond market following the Fed, and somewhat surprising, especially in the face of somewhat weaker data here. But despite the weaker data, now that the data is out of the way, with the data out of the way, you have the Qs rotating up. You have the Qs now up. What do we have here? 27 basis points on the Qs. You've got, which is up from when the data came out. You have Tesla now knocking on the door of that 247.7 line. It's right there. It actually got rejected, what looks like perfectly on my line. Oh, it's within 1 penny of my line. Let's see if it can break through this, because if it can break through this, it'll be at 250. Could be some robotaxi enthusiasm here. Then Enphase lost the lead. You've got Tesla. There you go. Tesla now trying to break through. And let's see here. What else do we have? You've got Bitcoin. Bitcoin actually moving down after the data. And so is the Trump SPAC moving down on the data. Well, not on the data. It's just moving down on the day. IWM moved down on the data. Now, that's really interesting. So, weaker manufacturing data, and then you get IWM moving down. I'm going to make a little observation note on that. IWM and Bitcoin moved down, and Bitcoin moved down, but QQQ moved up. Interesting. Even with the weaker manufacturing rates there. Fascinating. Oh, yeah, and then also, like, the 10-year jump was crazy. 10-year jumped from 3.4 basis points up to 4.7 basis point up. Weird. Especially, again, in the face of weak data. So something's a little backwards there in terms of the Fed calms with what's actually happening in markets, but they'll end up fixing that at some point. Okay. And yep, still green there on the Qs. And CrowdStrike's trying to go green. Ooh, look at that. Come on. Can you hold up above the line? Doing really well here. Tesla. And what else? I think that's... Oh, there it is. NVIDIA actually popped back up as well. Data came out right about here. So I'm going to write that down. NVIDIA and Tesla moved up. Did Apple and Microsoft? Because that could just be like a large cap thing then. Yeah, they kind of did. So APL, MSFT, Tesla moved up. Almost like a Mag 7 move on the data. You know, interesting. Amazon. Yeah, Amazon picked up on the data too. Really, the only other one left would be Goog. Yeah, it also briefly picked up after the data. Really interesting. But you're now seeing that get sold. Bizarre. Very volatile. You get data like that, and then you get the Mag 7 popping up. Anyway, Dow's pretty much flat on the day. It's only up a few basis points. Oil's up a bit. Gold up 34 bips. Okay, let's see if there's any other news. Got the S&Ps. Let's see. Oh yeah, Tesla's robotaxi event's coming up, 10/10. That's in like 2 weeks. That's crazy. Okay. Bostic has large cuts, bolster the labor market. Yeah, well, with what lag? That's the question. Let's see if I can get his audio playing. Hold on one sec. This is what he said earlier.
Now, my residual concern about inflation might have led me to settle on a relatively small first move last week, say 25 basis points. But such a move would belie growing uncertainty about the trajectory of the labor market that I have already noted. Now, for sure, the labor market is not yet flashing red for me. And I want to be clear that I do not believe that labor markets have weakened in a dangerous way. That is not what the data show, nor what business leaders tell us. Now, there's plenty of debate about the level of the neutral rate in the United States and elsewhere. And it's unfortunately one of those concepts that is easier to see after the fact than before. However, any disagreement on the true level of neutral was inconsequential, at least for me at last week's meeting. Wherever the neutral rate is, I don't know anyone who would plausibly argue with the notion that we are a fair distance above it.
All right. Interesting. I don't believe the labor market has weakened in a dangerous way. It's not what business leaders are telling us, but there is growing uncertainty in the labor market. Yes. Yeah, well, still maintain, I think there's this like hoarding going on. It's like, hey, no, everything's still okay, everything's still okay. But it happens so fast. That's always the scary thing. And when it flips, it flips. We will see though. Okay. Ooh, Darden's actually up 1%. That's surprising in the restaurant space. Bitcoin bleeding a little bit, but it did have some pretty nice gains over the weekend. So, if you zoom out, obviously we saw it hit our 63,840 line. But, you go back to last week and we were just coming off 61.7, and before that we were down in the 50s. So, 57,580, remember that was always a big line. So, all right, I think that does it for today. So thanks so much for being here. We're going to go over to the Course Member Live. Remember, go to stockhack.com. You can sign up on the interest list now if you want, and then you'll get an email when you're live for signups. So if you want to do that, if you're interested in a really fantastic financial advice service that's sort of a long-term consulting service rather than you getting billed hourly or some kind of quick one-time thing up front and then you never hear from them again. I'm going to build that relationship with a financial advisor on my team. Check it out, stockhack.com. And we expect to have our actual agreement live for folks to review and sign by 5 o'clock today. And you'll be able to book a Q&A call if you have questions about the service. You'll be able to do that. And we'll have a Calendly link around 5. And then October 1st is when the service will actually begin. So excited to see you. So check that out over at stockhack.com. As always, this live stream is not personalized financial advice. Thank you so much for being here. And we'll see you all in the next one. Goodbye. Good luck.